Are we already at the end of the price war in China? Welcome everybody, please make sure to watch this video till the very end. I will walk through a couple of different talking points that are connected to this question, so stick till the very end. I will be talking about NIO data in context and also Chinese economy. So overall, I hope there is value in this video. If you think that's the case, please smash a like. This helps to bring this video in front of more people. And also, if you're not yet subscribed, please also hit the subscribe button. So let's get into it. Tesla started to cutting production, and that could be an indicator that the price war is officially over, because, well, many associate Tesla with the company who's actually started the price war. They've been very prominent about cutting prices and that being their strategy. However, this has also unfortunately depressed the stock price pretty much and pretty hard, because we've seen that in order to expand demand, Tesla has cut prices and reached certain limits in China, given that there is lots of competition, that also investors were obviously not too happy about the fact that this is also costing some margin. Although we have to say that Tesla is also pretty good at manufacturing efficiency, so they are able to, at least that's the indication, keep up with the margin, the auto margins that have been recovered quite recently, despite the fact that they kept on cutting prices. But long story short, this might be one more of the indicators where Tesla now resonating more to cutting production, meaning, well, not prioritizing top line growth, year-over-year sales growth, which we're coming to speak about in a second, also in comparison to NIO. But also rather looking at the bottom line, so the margin, and with that EPS, which currently Tesla is facing a couple of downgrades, similarly to NIO's stock, given the fact that the EPS expectations are coming down. Now, I said also something in another video before that NIO is possibly, well, first of all, I'm always saying here on the channel, and that's also the general message by NIO, that NIO is not joining the price war. They do give a couple of incentives and discounts and a smart arrangement how they are, making NIOs more affordable by the topic how they are starting to get rid of the free battery as a service packages, or the free swaps, however you call it. But the trend has been that NIO average sales prices have started to bottoming out. So there have been a couple of indicators why this has happened. So overall, for example, the ET5 and the ES6 introduction are the most low-cost NIO models that they are, and therefore having them ramping up during the last year has also brought down average sales prices across the board, because these are the cheapest cars, and if they make up most of the volume, then obviously this is having an impact on the average sales prices. But generally, the bigger trend is for NIO that the revenues are going up year over year, the deliveries are going up year over year, and now finally also the margins are going up year over year. So that has already been kind of some indication that at least NIO is sneaking out of this price war and might be successful. So, and let's see where the industry settles. NIO said once the price war has more clarity, they will join the price war, but in another way. They will introduce their sub-brands and price them accordingly. So no price war for the NIO brand, but entering the price-sensitive segments with sub-brands, right? And maybe that's what Tesla noticed also in China, that we can get some fear of missing out. Now I'm talking too fast. Customers that are thinking if Tesla now starting to increase prices, then they need to be quick on getting their order. So this may actually also have the positive effect that Tesla is getting more demand by actually lowering production, but hiking prices pretty soon. Who knows? So this could be something that will be coming. And currently, there's always talk about weeklies. I say on this channel, there's not too much that we should look at these weekly metrics. I rather like to zoom out a little bit. So I made this chart today, and I'm presenting it here now also on the channel, because not everybody is following it. Me on Twitter, which by the way, I think you should do. _mm85. That's where you get the latest messages and infos. If you're not a Patreon community member yet, where you definitely get the most fresh stuff. But I'm also more active on X currently than on YouTube, by the way. But anyways, what do we see here? This is the daily production run rate, so that's adjusted for work days, and you see that over time we have a sort of seasonality, usually beginning of the year here, lower figures. That's what I've been talking on the channel for almost every year here, that the seasonal quarters of Q1, the first quarters of Q1 are definitely weak. Last year we also saw the second quarter being quite weak, but that has some additional effects. So usually second quarter already starts a little bit from the demand side picking up and stabilizing. But NIO had issues last year, which were for the platform transitioning and so on. And anyways, it took until May until actually this production run rate was bottoming out. Now what we see here with an indication of the current month, today we got a couple more weeklies, we see actually that it's possibly already bottoming out. Who knows what's going to happen? Maybe the next weeklies are lower again, or maybe the next month will be lower again, but there are reason to believe that this could already be the bottom. And so the question mark is, what's going to happen next? Well, usually we see that Q2 and Q3 and Q4 are just getting better also on these metrics. So will NIO be able to put in lower lows and higher highs? I'm not sure about the higher highs, but definitely is putting in a lower low here on the production run rate. And this is what you get when you're zooming out, not looking at the weeklies, but rather on, where's the industry in terms of cyclicality, seasonality, and so on. And overall the growth story for NIO is intact despite every doubts and all of those issues going on, and whether or not NIO will get to the Q1 guidance or not. Currently it's looking that it might actually just about making it, but it's not sure. Around about 4,000 cars in the next week might be necessary to do so. But anyways, I'm not looking too much on that. What I'm rather looking forward to is that I think Q2 will be great in year-over-year growth rates, simply because of the fact that NIO was really weak there last year. And so that's something interesting to look at. And I think that is rather telling the bigger picture here, other than what we're usually hearing on daily news and weekly news and so on. Now, one interesting thing that I also want to talk about here is maybe first here about a company called Leapmotor. And I just, so that's another EV startup in China, by the way, has been acquired some stake by Stellantis, a big automotive group. And I just got these numbers here today, and it's interesting because it's quite similar to NIO. And so another tweet that I made today about this news here is that Leapmotor sold 144,000 cars last year, up 29% year over year. For NIO, it's quite similar, 160K cars delivered, plus 31%. But the revenues for NIO are much, much higher, RMB 55 million versus 16.7 billion. So you see that Leapmotor are selling cheap cars and have a similar revenue, or not revenue, a similar delivery amount than NIO has, but in the mass market segment, definitely, right? And so this is putting some additional context onto NIO sales here, where I think, it's pretty impressive that NIO manages to have higher average sales prices than Leapmotor, a smaller total addressable market TAM, because of the fact that they're in this premium to luxury segment, so this market is smaller, but yet they're having the similar year-over-year growth, higher revenues, and most importantly, even also the cost of goods sales, the cost of sales for vehicles for Leapmotor is putting them just tinily in a plus here on a vehicle margin basis. But for NIO, and that has been a bad year, it was around about 9 to 10%. So 50 billion in sales cost versus 55 billion in revenue. So actually, NIO is earning money on each of the cars that they're selling. However, they have more overhead for their additional services and so on. So that's interesting to compare, seeing how NIO is competing here in this segment in terms of growth and so on. Also, by the way, even just looking at the quarter and then Tesla here, Tesla is currently trending down year over year, minus 5%. If NIO were to achieve this Q1 guidance that they have put out there, which there are still question marks out then this would land them at a 0% year-over-year growth. Not great, because it's essentially not growth, but actually growing faster than Tesla in China. And given the fact that NIO has now higher average sales prices as Tesla in China as well, and transitioning to the NT 2.2 platform during these months currently, and bringing out the 2024 models and still need to ramp them, that's also something interesting, right? And now I want to finalize and finish with another insight here, which is about house prices, because we have, these topic all of the time that China is collapsing, economy is not doing well in China, and the reason for that is real estate. But just came across the new home prices in the US, which are down 20% from 2022 peak. And we don't get these collapse headlines for the US, do we? But this is a substantial drawdown, which I think makes a lot of sense with the rising interest rates and the economy cooling maybe a little bit like the Fed wants. And the interesting part is that we never get the same data for China. So I tried to get the same, new home prices on average for China, and there is no such data. Even if you look at just most of the articles around real estate in China, you only get the month-over-month change figures usually. So one piece of data that I found is the average square meter price in China, and they come in at around 11,000 RMB, or around about $1,500, and they have now come down since this recent peak to 10,437. So that's a drop of around 5%, and that doesn't sound too much, right? I know it's a different figure, it's square meters, an average square meters and so on, so you'd need to see like how many square meters have been sold on average, and then comparing the average house prices by that. I don't have the same figure, but if we take the same figure for the US, it would be around -7%, I think. That's some of the percentages that I've seen out there. And so it's really tough to compare those different property markets. And despite the fact that there is so much uproar around what's happening in the Chinese economy and real estate market, you need to clarify that these similar things and patterns are happening elsewhere, like in the US and Germany, where house prices have come down significantly as well. And if we just would look at the month-over-month growth rates, of course, they would also be turning from positive, slowing down, even fewer positive steps, and then even turning negative. And that's what they're reporting about the Chinese economy usually, and therefore creating lots of head scratches and fears and uncertainty and doubt about how's the future looking for China. So just want to put this out there in order to give you a better context to understand also where NIO is sitting in this economy in China in comparison to competition, and also how it's actually looking on a cyclical seasonal level. Thanks for watching, and see you in my next videos.